Health officials cutting isolation and quarantine times for those exposed to COVID-19. The CDC coming out with some new guidelines, trimming isolation for those who have been infected with COVID-19 to 5 days from 10 if, and this is the big if they are asymptomatic. The CDC also saying people who have their booster shot do not need to quarantine following their exposure to COVID-19. However, they should wear a mask for 10 days after exposure. A lot to talk about now. Let's break it down and what this means for that reopening trade. Dan Nathan, your instant reaction to this late breaking news.
Yeah, first things first. Thanks for joining us, Frank Holland. It's great to have you on Fast Money, bud. Listen, this is great news. I think to the point that, you know, we've all gotten conditioned to the sort of lockdown, the quarantining, the sort of thing that has to happen when people are infected with this disease. And I think the good news is that our country is very well vaccinated at this point, and we're adapting to some of the new trends as it comes out with some of these new variants. So I think it's great news. I think going forward, you know, I will tell you that right now, though, I don't think it changes much for Q4 GDP. We've already seen expectations for that come down pretty substantially. We've been living with this variant now for about a month, and you look at some of the disruption that we've had as far as travel and hospitality over the last week and a half or so, that's not coming back. And I think so, you know, as we think about Q1, we're going to see expectations come down because the world, the rest of the planet, where a lot of our companies get a lot of their sales and earnings, are going to actually have fits and starts with this thing, and it's going to last a while. So Q1 GDP is going to come down. So I think, I'm not sure it changes a whole heck of a lot other than from a sentiment standpoint. Businesses are still going to be really careful as it relates to their employees and the back to work.
Yeah, right now we're showing some travel stocks right now. I don't know if you guys are watching the airline stocks. They're up fractionally right now and after hours. I'm not saying it's off of this news, but they are up after a very difficult weekend. Nadine, turning over to you. You and I were chatting earlier. I know you said a lot of investors are turning to the value trade possibly in 2022. Does this change your thesis when it comes to investing the CDC guidance at all? Is it as big as we're making it out to be right now?
Frank, I think it's really important what Dan said. Also, the fact that they're being data-driven. Omicron causes, fewer deaths, fewer hospitalizations, especially for those who are vaccinated and or have a booster shot. And so being data-driven is showing us that you can isolate for a shorter period of time, half the period of time. That's huge, right? And so you can get back to activities that's going to bring forward some revenues that have been halted, especially in the services sector. That's what Dan was mentioning. So I think it does change the outlook in terms of time frame for certain types of businesses. But what it doesn't do for our team is we still see the growth of GDP decelerating next year. And so while the party can last maybe a little bit more for the reopening and certain kind of stocks will be better here in the U.S., we actually prefer international stocks because they haven't seen that reopening yet and have to be really careful, I think, domestically to start adding some protection. It doesn't mean you have to do value trades. So we're actually not saying to buy financials, but I think you have to be a little bit careful, add some defensives, add some treasuries to your portfolio today.
You know, Nadine, great point on the data. Another piece of data that actually came up was Dr. Fauci on ABC. He said the last weekly average was 150,000 cases. It will much likely go higher. This is according to Dr. Fauci. So I don't know if we've quite reopened here. And speaking of data, Steve Grasso, you got some data. You actually also did some Googling that I don't think most of us have done. What's the right way to pronounce Omicron? I know you know. Does this change your investing thesis at all?
Yeah, it's Omicron.
Omicron?
Well, I think it's Omicron. And you know what? You hear it every day. It's pronounced one way or the other, and no one cares, about the pronunciation. But I think the problem is no one knows what the protocol is. No one knew what the protocol was before we started the show. And I will tell you that I'm going to have to Google search and see what the protocol is now going forward, even with that headline. So I think what the market is really anticipating, and Nadine touched on this, the value complex. You don't have to be straight out buying, energy names or just or financials. But I think she brought up a key point. International exposure. We've been so locked into domestic as the only safety bet. So I think come the change of the calendar, which we're approaching very quickly, you're going to see that value trade come on. What does that mean, Frank? I think it means you have to dip into chemical names, material names, and everything else. But FANG could still be strong. People use it as safety. People think that large cap tech is somehow a value trade. And you know what? So be it, because the market cannot go higher with those 6 to 8, without those 6 to 8 names.
All right, a lot to chew on there, Steve. Big dog, I got to come to you. What's going on? What are you seeing when it comes to the travel trade? You just celebrated a birthday yourself. Right. Did you travel? Are you back traveling?
Oh, I'm traveling all the time. I have been actually, literally over the last couple of years, I've traveled and I've felt comfortable about it. I've done all the different protocol that people want us to do. But I think this is interesting, Frank, because when you look at this, it almost seems as if the CDC is taking a page from some of the major sports franchises, right? I mean, when you look at the NFL and what they've done, the NBA and what they're doing, and they've shortened this whole thing. I would have expected, and I've been looking, and I see some fractional, as you mentioned, moves in terms of the airlines. And when I look over at casinos, which I think is another one of those areas where we've seen that reopen with Wynn and Las Vegas Sands and some of those names. But I am not seeing a whole lot of movement right now. I mean, maybe we will. Maybe we'll see a little bit more of an aggressive move come tomorrow. But I would have expected to see a little bit more of a lift from the airlines and the cruise ships and the casinos and all those areas where we've basically been focusing on for part of that reopen trade. And I'm not seeing a lot of movement yet. And maybe it's just because it's so early and we're trying to learn more and more about this and how this is going to function. But I think to the point of Nadine and what Steve was talking about, I think it's all about quality names, whether they're in the tech world or in the semiconductor world or whatever. Quality does matter. And obviously, if all you've got to do is look at today and look at what's really been struggling, what's struggling is those high multiple names, the names that really did so well, obviously, in the early days of the pandemic, but now have started to fizzle a little bit, whether you're looking at Peloton, DocuSign, those kinds of names. Right. So I think that's something as well. So there's a lot of different things, Frank, that we're going to be dissecting over the next couple of days. And this is something that we'll definitely be looking at over the next month or so to see what happens, obviously. We don't really know, and we're going to have to find out, obviously, literally live each and every day.
Yeah, let's turn our attention.